Market Views. I'm your host, Kudakwashi Taimo, and today we want to probe into the half-year financials of Dairyboard Holdings as well as as well as Masimba Holdings, so to speak. Joining me today, I have Tapiwa Nashe, a financial analyst from CABS. Welcome to the set, Tapiwa.
Thank you, Kuda.
Well, so before we delve into the half-year financials of the two listed counters, let's start by just providing a refresher to our viewers there in terms of how the Zimbabwe Stock Exchange as well as the VFX performed over the week. So we can see right there that the Zimbabwe Stock Exchange continues in further gains, with the ZSE All Share gaining a 5% there. In the VFX All Share, it took a dip by 2.1%. But perhaps now, on a granular level, one of the notable counters that we can look at is Tanganda. We've seen the tea company announcing its intention to delist from the ZSE and to relist on the Victoria Falls Stock Exchange so as to raise 7.7 million. So perhaps that's one of the reasons why it recorded a gain of 76% over the week. And on the Victoria Falls Stock Exchange, one notable counter that we can also look into is African Sun, which backtracked on its initial intention to sell Great Zimbabwe Hotel as well as Beitbridge Hotel. But now we are yet to see how the market will react, since they have indicated its intention to dispose of its iconic Monomotapa Hotel. And on the ZSE, mainly two counters are constituting a greater part of the market activity, and in terms of weighting, Delta and Econet constitute 46%. And on the Victoria Falls Stock Exchange, it's INSCO right there, which is the second largest counter, recording a greater part of activity. So now let's delve into the half-year financials of Dairyboard Holdings, right? So for the period ending 30 June 2024, revenue increased by 13% as a result of price adjustment, and sales volumes increased by an overall 2%. The liquid milk category as well as the foods category having received a growth of 21% and 25% respectively, but the beverages segment took a dip of 8%. So Tapiwa, can you possibly provide your analyst commentary of the top line of the counter?
All right. Thank you, Kuda. As you see, Dairyboard Holdings Zimbabwe is really performing well despite economic crisis we face in Zimbabwe, mainly from currency crisis and inflation. As you mentioned before, the revenue increase is attributed to different categories of products. For example, a major increase in revenue is attributed to dairies, specifically from fresh milk, which is a consumer non-discretionary product, which means there is no way for us or for economic agents like household to go without milk. It's part of our day-to-day a product which we need to consume. So even if the price adjustments increased, that was not an easy decision for household to shift to other products, since it's in the category of non-discretionary products relative to other products like Fukuma Hell, which is part of a discretionary product which can be easy to forgo or to substitute. So generally, Dairyboard Holdings is performing really well despite a huge operating cost we face in Zimbabwe, mainly attributed from power cuts and other economic problems like currency risk and inflation risk. So generally, Dairyboard is performing really well.
Wow, interesting, yeah. Especially after taking into account that in terms of market share,
Okay.
It actually increased over the half year, I think from around 25% to 36%, which is quite an improvement in terms of its milk uptake. So yeah, I do concur with you. But also speaking about what you have said, we have seen the EBIT margin actually, taking a dip by close to 65% due to the operating expenses, like you have said. The counter was affected, especially, all of those sugar taxes and issues to do with VAT and operating expenses, generally. So, in your view, in this current half year, are we likely to see this line item taking an improvement, or it's gonna remain the same as we are now approaching the full year ending 31 December 2024?
Thank you. Sure. I project any increase in revenue as we approach the end of year, especially with an increase in uptake of dairy products, for example, fresh milk and other beverages, especially during the holiday period. So I'm anticipating an increase in sales, an increase in revenue. I hope these guys or the management of the dairy body will manage to do away with the impact of devaluation. So I anticipate an upward trajectory in terms of revenue for dairy body.
All right, interesting. Now, taking another, view of Masimba Holdings. Now, we've also seen it, the top line, which is the revenue, increasing by 30%, right? And the order book, I think it also increased by around 2.4%. So let's unpack the revenue of the group. And okay, what's also interesting, I also looked at the balance sheet of the contracting giant, right? And I saw that the debtors are constituting around 55% of the total assets. But also interestingly, the group has unearned revenue, right? Close to 45% of total current liabilities. So let's talk about this top line item and the effects on the balance sheet. Let's just unpack it for a layman to understand.
Oh, thank you, Kuda, for Masimba Holdings. I checked, and the order book for Masimba is really strong, which indicates the potential for future revenue. Especially if you check the accounts receivable on Masimba balance sheet, you see the future for Masimba in terms of the top line of their income statement is very healthy and it's promising. And if you take into consideration the move of the government of Zimbabwe when they come up with a statutory instrument 151 of 2024 for the state of roads rehab
Construction.
You see this Masimba Holding is one of the company in the construction sector. Has an opportunity to get a chunk on the investment which is done by government in trying to accumulate capital development in Zimbabwe, because as we see the government of Zimbabwe is trying to rehab several roads for which covers almost 80,000 kilometers, including the road like Murambinda and the construction of dams, which is an opportunity for Masimba to tap into and improve their revenue. If we check the balance sheet for Masimba, is quite worrisome if we check in terms of debt to asset ratio of above 50%, especially with the current situation in Zimbabwe, where we experience some economic problems attributed to currency crisis, and also emanating from high political risk, as once mentioned by my beloved investment banker Nigel Chanakira, together with Tendai Bit during their interview with the Alpha Media president Trevor Ngcobe, when they were talking about the risk of investing in Zimbabwe. So to have such a high leverage on their books, it's quite worrisome. If you want to see the impact of that heavy leverage on Masimba, if we go on the net income, on their income statement, you see it was heavily affected with a net interest paid, which means they were trying to pay their creditors out of the little they have, of which if you go up under operating cost, the operating cost in Zimbabwe is very high, which affects their income before interest and tax. Wow. So to have a bigger cost on interest paid, that will affect the bottom line of their income statement, which is net income. But I'm happy if we check on earnings per share, there's a little bit increase from $43 to $50, which is quite a good increase in terms of realizing the return on investment for investors. So I am happy with that. It shows some health somewhere, somehow. If they try to manage their balance sheet in terms of a debt, there is a chance for Masimba to have a good business.
Okay, interesting. So my takeaway there is that the group is experiencing a lot of challenges as far as liquidity is concerned, right?
Yes.
I'm sure, and also that's the reason why the group net profit margin fell eventually by 19%, right? And also, I think it's the only entity which is in the contracting business which is listed on the Zimbabwe Stock Exchange, because some of its competitors, Luke Tensor, Bitumen, all of those counters are not listed on the Zimbabwe Stock Exchange. So for investors who wants to obtain a stake in the counter, I think possibly there is a room for them to obtain a stake by acquiring some of the shares on the listed counters there. So I think our viewers have obtained one or two insights from what we discussed today. And maybe just before calling it a day, let's encourage our viewers, to look into these financials when these companies publish their financials. Let's discuss about these things. And especially up to now, I'm sure you have seen, Tapio, I'll just give you a minute or two to share your thoughts. It's interesting, especially for us financial analysts currently, is there a lot of, kosher announcements that are being published by listed entities. I've already highlighted about the issue of Tanganda, also National Foods, which is listed on the Victoria Falls Stock Exchange, now pondering about whether to delist on the Victoria Falls Stock Exchange. And a lot of people, they do not have reasons whether it has got an issue to do with corporate restructuring, with INSCO, or whether it was to do with the issue that they were no longer realizing benefits of being listed on the Victoria Falls Stock Exchange. African Sun, I have mentioned again. Or what's your take on just the current state of our local capital markets?
Thank you, Kuda. Our local capital market is not performing really well. If we look on numbers, if you check the developments since the introduction of ZIG in April, if you check measuring the performance of Zimbabwe Stock Exchange using All-Share Index, in April the percentage change, it was -2. Then in May, the percentage change, it was a +2%. Then in June, if you check, it was around 27%. Then in July, it was around 54%. Then August, it was around 55%. Then in September, it was around 22%. Then previous month, which is October, it was around 20%. If you check from July to now, the rate of change is increasing, but increasing at a decreasing rate, which is quite worrisome for us analysts. And it gives us a picture that the investors are now pessimistic given the performance of Zimbabwe Stock Exchange, particularly due to currency devaluation and
the macroeconomic environment,
which is not conducive for investment, especially if you want to invest in long-term assets or for long-term. So it's not good, it's not investable for long-term investors, maybe for short-term investors, for those who want to enter and exit the market maybe within 3 months. Yeah, maybe it makes sense. But if you look at Victoria Falls Stock Exchange, the activity there is not that good. There is no activity. There is an issue of liquidity on Victoria Falls Stock Exchange. There is no movement, and the market is flat. That's the reason why you see companies like Tanganda and National Foods considering to delist on Victoria Falls Stock Exchange, because it's not good for them to raise equity capital from that market, because there is no activities, there is no investors there.
Oh, okay, interesting. So, but since now we, a lot of companies, some are migrating from ZSE to VFX, well, still remain a question whether we record an improvement in terms of liquidity there. But well, Tapiwa, thank you so much for being with us today. We look forward to having you in some of the coming sessions.
Thank you.
Yeah, so viewers, there you have it. Don't forget to comment, to like, to subscribe. And if you have got any questions and other contributions that you think are topical things that we should take into account or that we should discuss, feel free to comment. It's been an interesting episode, and join us again on the coming episode. For now, it's bye-bye.